Hey, everybody, can you believe that there was talk about market crash? But really, at the end of the day, prices simply came into our levels that we talked about the week previous. That is the edge that we are giving here in the trendy room at Simpler Trading. It's absolutely amazing. We are showing with a little bit of patience, understanding where the bigger buy and sell zones are. We align ourselves there and we keep our ears out of the noise. Price is king, and we will continue to do so going forward. My name is Trendy John. I'm a professional dip buyer and or buy and sell zone identifier. And that's what I do is I help people locate these areas to align yourself with the bigger money in the market. There's no reason to think that bigger money has an edge. Our edge is finding their edge and aligning ourselves. So this week, when I go to show you these catalysts, please understand that all noise pushes price into these buy and sell zones. So starting out on this week's major US economic reports and Fed speakers, we're going to get into this list, and it's important to understand it's just catalysts. Don't be afraid to trade. Before we move on, please just take a few seconds, hit that like button. And for those that keep hitting the like button, I see you. I appreciate you. Thank you so much. For those who are not hitting it, I get it. A lot of times I listen to the videos and I just move on, but it really does mean a lot to me. And it helps my algorithm in YouTube so that I can reach other traders who are looking for more of a disciplined approach and how to align themselves. So please do me that favor and hit that like button. Starting Monday, February the 9th, there are a lot of speakers, really, and we can look at this list, and this is Eastern time. Please understand this is just noise, and after a 124-point move up on Friday, I wouldn't be surprised to see us kind of settle in and just let that day be more of a choppy inside day, if you will. On Tuesday, February the 10th, we're looking for price index, US retail sales, business inventories, and then a couple speakers coming in. The first 2 days seem pretty quiet, if you ask me. But we do have quite a few earnings coming up, and I'll get to that here in a second. Wednesday, February the 11th, we have U.S. employment report. We have the U.S. employment rate, hourly wages. Thursday, initial jobless claims. It sounds and starts to get a little bit more interesting. Then we have existing home sales. Fed Governor Stephen Moran speaks. And then on Friday, and guys, don't forget Valentine's Day. Make sure somewhere in the middle of all this chaos that you take care of your significant other. Okay? Make sure. All right? Or it could be a good week in the market and a bad week at home. All right? On Friday, core core CPI. And that is what we're finishing up on the US economic calendar. The next thing that we want to be looking at is going to be whispers, earning whispers. We have a robust amount of names reporting this week, and I think it's really important that you understand what can be impacted in your portfolio. So you may be holding one of these, or maybe you have a name that's closely related, and if these guys report good or bad, it could have an impact on your current position. Now, what I like to do is I actually teach, I have a class on how I trade into earnings. That's right. I trade into earnings on names that are showing me that there could be a bigger move than what the market makers are expecting. And I do that by finding buy and sell zones, and you'd be surprised how well that works. Now, for you, if you want, you can always wait until after price has moved and then execute. I also talk about how to do that. But some of the names that I'm really interested going into this week pop up here on Tuesday. We have Robinhood, okay, my Lyft right here. And then we have Datadog. We have Spotify, one of my favorites. And then moving on into Wednesday, we have Shop, AppLovin. And then we have ALB, okay. And then we have Cisco. And then we have McDonald's, which, guys, if you haven't looked at the chart, holy moly, go to the quarterly chart, this thing looks like it's about to really break out. And in the beginning of this year, we had XOM leaps, and I'm telling you, it looked just like this chart. Doesn't mean it's going to act the same as XOM, but I'm just telling you, go look at it on the quarterly, okay? On Thursday, a lot of other good names list. I don't need to go over all of them. Just find the names that you like. Understand that these are catalysts that push price into buy and sell zones, okay? Next thing we're going to look at is going to be the bigger picture of SPY. Why is this so important to you? Because really, at the end of the day, this is how I guide myself in my portfolio. I understand that if the SPY, if I'm super bearish on it and I'm looking for price to move down into a zone, that the rest of my portfolio, most likely the majority of it is aligned and will also move down. But if I'm bullish or I'm looking to buy dips, I'm doing the same thing in my portfolio. This past week, a couple important things to take into consideration. Our levels that were already there on your last broad market analysis last Sunday held very well. I said that these were going to be our major levels. They held. This week, our major levels are going to be this 23.6 extension up here at 69, or sorry, 698. And then our level down here, the primary 618 at 675. How did I find the primary levels? I use Fibonacci and I anchored them to where you see the orange circles. So from this pivot low to this pivot high here, and this is how we come up with those levels. Our support for this, just in case my level were to break, notice that I have 667 by 650. Again, these levels to the upside are Fibonacci extensions, and they do serve as resistance until proven otherwise. The next chart, and really some big news if you're using Thinkorswim, you would have noticed that there was a misprint on the candle. So when I opened this weekly chart earlier this morning, I noticed that we had a wick that went all the way to zero, and I would imagine you guys had the same exact thing. What I had to do was I brought up TradingView and I looked at what the low was for the week, and then I came in and I right clicked on the candle, and then I correct this bar, and this pops up. And all you have to do is come down here and correct the low. Now, what I found on TradingView, and if you guys have something different, please reach out to me and let me know. But I had found that 675.79 was the low. And if that's true, all you have to do is put that level in there and hit apply, and it will fix that wick. That wick actually threw some things off. It's a little frustrating because I've had some problems here with Thinkorswim over the last 2 weeks. Like, for example, trying to copy or take a screenshot. Notice that you'll get a blank screen the first time. The fix on this is just to close this out and then hit it once more. Then you'll notice that it's actually popping up. They have not fixed that yet. So that's an issue. And again, that candle could be an issue. Regardless, this is what we have for the weekly, everyone. Notice how we are continuing to stay above that weekly cloud. As long as we're staying above, I think that we continue to buy the dip at buy zones. Now, if we start to close underneath this 9 EMA, kind of like this guy right here, we're going to be cautious until proven otherwise, okay? For now, we are above it. We did get back above it, and that is, the important part of this. Please take note that as long as we hold these levels, I'm happy with that, okay? Over here, one thing that I wasn't showing you earlier was the quarterly. So the quarter is very important. This wick again was all the way to zero. It looked like that when I opened it up. Again, this is an issue for Thinkorswim, and I hope they fix this because what it did was it messed up my edges. It actually put my yearly edges here, and I'm hoping after next week that this issue is resolved. So this threw us off, and it makes me wonder. I'm actually really interested in your comments on this, and I'm sorry that I'm continuing to talk about it, but now it throws off indicators. All right. So, well, it threw off my future indicators. Now it believes that our edges are here. So we may need to come in and fix these. I'm looking into a solution for those two edges. Okay. Back to the quarterly though. Nothing really happened. There's nothing to talk about here. All right. We're still in this 2025 projection box. And as long as we're holding that box, all is well. But I want you to take note of the 9 EMA because the 9 EMA has been working for decades. And I need it to work. And it is confluent to the support for 2026, which comes in at 611 by 560. Let's go ahead and move on. We are now going to go into QQQ on the bigger picture. All right, so on the cues, all right, so as of right now, the quarterly candle, which has about a month and about 20 plus days before it closes, is currently inside. All that means is that the close, as of now, happened inside the body of the previous candle. And as long as it's in there, it could be sideways to down. It's not until we break above the previous body that we have continuation to the upside. But let's be real. In 2025, my projection was 3 white soldiers. That's exactly what we got. And now we're coming inside. One thing that I will tell you when this month and 20 plus days is closed, if this happens to be inside, it is really important into the next quarter to understand we could end up going inside and down until we hit our support or line up with that 9 EMA. Okay. Now we will have a better idea if that's going to happen towards the end of the quarter. So for right now, just follow price. Let's go ahead and move on to the smaller picture, which is the weekly. We're going to take a look here. Take a look and notice that our support from last week actually held, but I did change it up a little bit. I went underneath this bigger candle there. And then I used the bottom of this wick. This is going to be our support. And this is actually where it came into as well. Notice that our levels, what I have for you is like a zone, if you will, of support. And then I have a zone here of resistance. Everything between this, we will talk about from an intraday strategy, but these are your two major opposing zones. And quite honestly, I feel as if we're going to stay in here until we see from the big name like NVIDIA report and so forth. We still have a lot of earnings ahead of us, okay? All right. So next thing I want to be looking at is going to be the dollar. We're going to come up here and simply type in the dollar sign, okay? And then DXY. We're going to use this second one. All right, so what happened this past week? Well, we shouldn't be surprised if you've been watching this week after week. We found a buy zone. We expected the dollar to move up from here. I said as long as the dollar was moving up, look for the market to go sideways to down. That's exactly what we got. But you'll notice that on Friday, we actually started to rip. Now we came into, and the reason for that, when we're looking at the dollar in correlation to the ES, the NASDAQ, and so forth, is it hit this resistance here, which is the trendy edge. So we bounced, we were being careful, we came into the trendy edge, we hit resistance, and therefore then the market started to move back up. Our major levels for this week are 98.6, okay, which is about right here around this gray zone, and 96.16, which is right here at your green zone. So if we get up and over this, please be careful, as we could go sideways to down. If we get back down to here, be careful. We could go sideways to down because we would bounce from there. But everything between here, we have room for the market to actually move up, especially if we're making lower highs and lower lows. I would say on a smaller time frame, like a 30-minute or like a 2-hour, something like that. Okay. The next thing we're going to look at is not the TNX, not the 10-year treasury. I'm bored of looking at that. Unless something really big happens, guys, I'll pull that chart back out. Instead, I really wanted to bring the VIX into the mix. And the VIX is really important because a lot of traders here have found over many, many years that trendy edges, our proprietary indicators here, actually work on all charts. And what I love about it is that you can look at and anticipate what the market's going to do in advance. And we do that by using trendy edges, okay? So I'm going to bring you to a little bit smaller time frame here. Let's go into the daily right here. I'm going to open this up a little bit. Please bear with me. Okay, we're going to open that up. And I put a couple notes on here so you can understand. Treat your edges the same exact way. If VIX comes into a lower edge, take caution. upper edges look for a stall and a possible risk on environment. Okay. I'll go over that here with you in a second. So so a lot of people overanalyze stuff. Once you have a good process, you can apply it to any chart. Everything's fractal. So what I mean is if this were Apple and Apple moved up and hit a supply zone here, we would expect it to reject. So in this case, we found a sell zone. The VIX went up. We expect it to reject. And guess what? The market goes up. Notice that the VIX comes down into a 200 SMA. If this were Apple coming back into the 200, I would say, hey guys, we could get a bounce. Reason why on Friday, you probably seen some hedges come into the market. Okay. So from this 200 SMA, the VIX could actually bounce right back up. Okay. So possible support, meaning we could, if you put a hedge on for Friday, if we gap down tomorrow, or have some kind of move back down, that hedge could work out for you. Down here, I'm using a trendy edge and some inside and up formation. This is support, possible risk off, as you could see a pop from here as well. So if we break down below the 200 SMA and we're headed down, expect the market to continue to the upside. Okay. Now it's important to understand that always use the ES and NASDAQ zones I'm going to go over with you. They'll help validate what I'm talking about, okay? And I'll talk about that here in a few minutes. The next thing we want to be looking at is going to be the skew. All right, so the skew came in at 140.31. So it's getting closer to the risk on, meaning there must have been some fear that was coming into the market. And as we get closer to those green lines is when I start to think about risk on. Now, again, in correlation to buy and sell zones. So if I were looking at the skew and it's coming down and I know fear is in the market, and then I look over at the ES and the NASDAQ and I see it's coming into the buy zone, we have what's called synergy or we have confluence, and this gives me more validation to put some risk on. Okay. So we are not near the red area. If this was the case, there would be too much exuberance in the market, too many people on the call side, and I would expect a rug pull. At the moment, it's actually pointing more to the fear side of the market. I feel like people are a little uneasy. Although we had a ripper on Friday and a lot of people were able to take advantage of that, that's not the case for everyone. A lot of people probably, unfortunately, lost a lot of money because they were buying puts and thinking the market was going to crash. Again, I think this is important to have an edge in the market, and this is why we use all the things that I'm teaching here in the broad market analysis. So the next thing that I want to show you all is going to be the fear and greed. Notice how we were getting closer to those green lines down there? Well, that makes sense as the market starts to tilt to the left-hand side, but believe it or not, we're just in neutral, okay? So again, we're just in neutral, but the previous close before that was a 32, showing some fear in the market. All right, next thing that I want to be looking at is one of my favorites. It's the ES futures. Again, we trade here in the Trendy room and the SPX room. We trade futures every single morning for about 30 to 60 minutes, showing traders how to make quick money and or using our strategies to help you employ your future strategy and become a better trader. The ES futures leads me big time. Like I'm looking for buy zones and sell zones, and we do the top down approach. On the weekly, I'm going to tell you that our upper YE, we didn't change this. This was a major level for us last week, and it worked very well. You can see that we came right into it. We bounced right off of that, and then we came up. We smacked a level, which was the secondary 88.7, which was also a major level. And this was the stall. So right now, I'm going to keep it that way. I believe that these are your two major levels going into this week. Up and over, create a base. We can see these Fibonacci extensions. Down and under this yellow line, we could see these green zones below. For right now, all of this is intraday strategy. I believe after 124 points up, we could see some continuation. The question is how much continuation? It just feels like a little bit of digestion coming into this week and investors trying to figure out what's going on. The next thing that I want to be looking at is going to be the daily. The daily is where I have triggers, and these triggers are just levels that I'm using structure, Fibonacci, and so forth. And then when price gets there, we go ahead and assess whether or not we want to get in or out. Now, in this, I kept the same zone that I gave you last week. I can't make this up. These two made up a zone that came from the inside and up formation on the daily, and they worked really well. Sure, at first it probably felt a little like, uh-oh, but we did not break below the trigger long down here. This made up this zone here, and you can see that it worked really well from 68.39 all the way into 69.60, or that 120 30 point bounce that we saw on Friday. Holy smokes, it's good to have good levels. All right, so now my resistance level is up here at around the upper trendy edge for this week. So again, this is where I would expect resistance in here. Down here, I'm going to keep this zone because if anything, I think we could come back and make a higher low out of it and just kind of bounce again and go sideways. Okay. All right, next chart is going to be the 4 hour. And matter of fact, what I'm going to do is go over what I'm seeing here. And I drew some arrows just to kind of help you all out. So let's start with the inside and up formation. IAU stands for inside and up. This is our buy zone, if you will. And that's happening at 68.10 by about 67.45 or so. Okay, right in here. And that is represented with a green zone. This is where I'd expect support. This big candle here is a really big imbalance candle, meaning price moved very quickly. And if prices were to reject and come back down, I do believe that this could serve as a really nice area for a bounce because we would be lining up with a lot of volume here. In this area, we rejected on Friday and kind of stalled. And the reason why is because if you come over and you zoom in, give me 1 second. I'm going to go right there. Let's see if this works. There we go. We have an inside and down formation. That's your inside candle. This is your big down candle. So we had a lot of pressure or selling pressure. We came up and tested and we stalled. If we pull back tonight, don't let it be noise. I said if we pull back, just know that you came into a zone on Friday and we could be moving back into around this 9 EMA at around 69.20 or so. Okay. It's not until we break down into this cloud and start going lower highs and lower lows that I would expect this imbalance candle. Okay. If we gap up tonight, this level 69.65 needs to become support. And I do believe that we make our way up to 69.96, which is a sell zone. Be careful here. And again, we teach you how to trade these zones within the room itself. Okay. Next thing we're going to be looking at is going to, before I move on, notice that on the ES futures, our overall banners are pretty much neutral. So my sentiment is neutral going into this week, or the other best way of saying that is I'm flexible. Okay, I'm not overly biased here. Next chart we're going to look at is going to be the NASDAQ futures. NASDAQ futures was pretty interesting as well. It also came down into some support. It worked. We have some major levels this week. It's going to be the 618, 25,446 by 24,449. If price just stays between here, again, it's more about the intraday strategy. Understand it's going to be a little choppy. If we get back above the 618, that's great for the bulls. But right now, guys, where I measured, so from this high to this low, we're below the 618. That's not good for bulls. So this is your major level bulls. You guys need above that. Bears, you can't get extremely bearish. Your time is like 1 to 2 days, and if that. Just be careful because you keep coming into areas of support or buy zones, and that's why it's important to know where these levels are. It's not until we break down below here that I would start getting concerned, for the bulls. But for right now, it's more of an intraday strategy, so I hope you have that. Moving on, let's go ahead and get into the daily. Same thing here. We have triggers on the charts. Let's take a look at them. Trigger long down here towards 24,426, and then we have this 200 SMA. I'd definitely be interested in this area. As far as resistance go, 25,288. Short trigger on this one, 25,872. And again, it has to show me signs that it's worth the R&R on a smaller time frame if we get to that red level to go short. Okay. All right, next thing is going to be the 4 hour. Pretty much looks like the ES futures. It did not make it up into the sell zone here. It made it up towards my trendy edge. So just know if we gap up, be careful around 25,340 to 25,550. Or sorry, 25,506. Be careful in this area. Your major zones are going to be this green zone, 24,576 by 24,227. And your sell zone, where I want you to really be careful, is going to be up here at around, And I apologize, I didn't have a line here. We're just going to come over this trendy edge. It's going to be 25,815 by 26,400. So again, a lot of intraday strategies. Let's get over to Bitcoin. I did a short on YouTube. Don't forget to be a subscriber to my YouTube channel. Just go out and look for Trendy Trading. You'll see me in front of a desk. That's me. Check it out. I do a lot of shorts and or long videos if you want to watch those as well. Bitcoin is a big subject nowadays. I'm a Bitcoin holder myself. My overall thought process was that once we had broken the level that I discussed last week, that we would come down into this buy zone, and that's exactly what we did. We came down into this buy zone. I actually added in my account in here. We got a pretty good pop so far, but listen, I'm not expecting much over 75,000, but if it happens, cool. 75,000 to 86,000 is a bear channel. What I'm expecting there is, if we bounce and we get that nice bounce, you'll get a lot of hopium come in, like, heck yeah, I bought the right dip. But a lot of times it will reject in this area and go sideways for a while and kind of shake some people out again. Be careful. Bulls, you're not in charge until we get back above 102,000 or so. 104 actually on the daily. We had this 200 SMA above the bearish golden profit. We got to get above 104. And I know it sounds like it's far away, but it could come very quickly if we get some good catalysts in the market. Just know we came into our first layer of the ad zone or the buy zone for me. And so far it's worked out. That's all I have for this week's broad market analysis. Sorry to make it a little bit longer than normal, but again, hit that like. I can't wait to see you in the room. Talk to you soon. Have a wonderful football Super Bowl Sunday. See you soon.